Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
So you can adjust your targets accordingly based upon the momentum of the follow-through. If you have a follow-through where the momentum is actually stronger than the first leg of selling, let's say here, let me change the tool. Let's say we have an initial leg of downside looks like this, right here. And then you're looking at the follow-through, and it starts to pick up. Well, because of that, you can adjust your target level where an initial target would have been around here. You can look for a little bit more on it because you have that increase in momentum. So go and look for another target as a support or resistance level. In this case, you'd be looking as a support level. Go and see what are potential support zones that are a little bit past what that equal move target would have been, and how that can help adjust your target level. Michael asked, would you protect your profits with a trailing stop or just estimate a profit target? Most of the time, I use profit targets. I very rarely actually use trailing stops. I'm not a big fan of trailing stops. I will adjust my targets based upon the momentum on the follow-through, but going into a setup, I always have a target in mind. I know exactly what I'm looking for, but sometimes it gets adjusted according to what the follow-through starts to be. So if you have a slower follow-through, you have to adjust your target accordingly. This breakdown here, for example, had that slower follow-through. So I'm going to be looking for a closer support level. In this case, we had the 100 whole number support. I'm going to be looking at a closer support level to take my gains off. And oftentimes you'll see things, for example, where you can kind of look at smaller equal moves. Like over here we had this one ended up equaling this one. And so you can drop down and look at things like that. Or you can see, like, for example, if the first move had two waves of downside like this, and then there was the correction, and then here's the continuation. Chances are that continuation is going to offer two waves of downside as well. But if you're looking at it and that initial wave of downside is slower, then use that to help judge where an equal move is going to be. And that will help you adjust your target now on the entire position based upon the start of the follow-through on the trade. So this does change over time. There are some cases where a lot of people would like to use a trailing stop, but I'm not a fan of the set trailing stops because they tend to be triggered pretty easily. I mean, especially if the momentum is slowing and shifting, or by the time your trailing stop hits, you've given up a lot of your gains. For example, if we took this breakdown here, and you used a trailing stop, and you use like a channel break, well, by the time that confirms, it's about here, and your entry is probably around here, so you're basically dealing with a break-even stop, and you already have given back gains that were worth more than what you risked in the first place. So I'm not really fond of using that type of method for getting out of a position. There are times that I will use a trailing stop, but it's pretty rare. So I'm going to go ahead and wrap up here. We've got about 5 minutes left. If you have any questions, please feel free to post them in the Q&A. I really appreciate that you guys made it today. This last slide here kind of touched upon an earlier thing where I talked about that this could have been a series of 1, 2, and 3 groups of the two-wave corrections leading to an upper breakout had the momentum held here and offer this slower move on the upside. So it just shows you that shifting momentum and how that could have impacted it. Since it broke back into this previous lows, though, the momentum shift was not as extreme overall, so it allowed it to hold within the range itself. For those of you that are attending today, I do have an offer with the Expo. I'm giving a presentation at the Expo, a workshop on Friday at the Las Vegas Online Trading Expo. For those of you that are going to be there, it's a workshop at 5:30 to 6:30 Friday night. And I have an offer where I'm offering 20% off of all of my courses, and that goes into things like the building blocks and how to combine these to create strategies. It goes into a lot of the details. I actually have 5 building blocks that I use, and it goes into a lot more of the details with the trend development and everything that you've seen here. So if you enjoyed that, this is your chance to get substantial savings. I don't offer discounts very often, so if you're interested, there's the URL for it. It's tonihansen.com/expo2010.html, and there's an offer where you can get the online version or you can get the DVD version of the course. So hopefully you guys will check that out. For those of you that missed part of the presentation, it is recorded and will be available later. So don't worry about that if you did miss it. So you will be able to have access to it in the future, or even just if you want to go and review everything, because I went into quite a lot of different things. So you'll have that chance to go back and review it. I'm going to kind of scroll through here and see what kind of questions we have pop up. One of them was, can I please define pace again? Yeah, this is a good question. Like I said, this is something that kind of was unique for my teaching. Pace is another word for pace would be momentum. So if you're looking at momentum, you're looking at how a current move in security is comparing to previous moves. So if you've got back and forth action, the momentum or pace of these moves would be considered equal. When you're looking at an average momentum move, I usually try to find, identify a V or an upside down V in the market, and I'll use that as my basis for what the average momentum in that security is. And then when something is more gradual than that V, I'll consider that to be slower than average momentum. And if it is stronger than that V, I'll consider that to be more rapid. And when you're looking at how these compare, shifts in the momentum impact what is going to happen next. So if you have a slower than average move following a stronger than average move, you're probably going to get a really strong breakdown or breakout to the upside if it's reversed than you would if you had something that was trying to break down out of a range where it's been trading back and forth at pretty comparable momentum. That has a higher chance of being a trap where it'll give you the short, breaking out of the channel, trap you, pull back up into the channel, and maybe then it continues later, or maybe then the momentum shifts again and reverses on you. So you want that shift in momentum to give you better clarity on what the next move is going to be.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.